Now, last week Friday, we saw the Dow and the S&P 500 closing at almost 3%, whereas we saw the Nasdaq closing down 3.5 or over 3.5%, which is something that, of course, it came from the CPI figures we received late last week, which of course showed that the inflation in the US is still very high. So that resulted in the stock market, or in most companies in the stock market, to end the week on a red. This is something that of course we are currently sitting with, and it's not America's problem. It is a problem, or inflation is one of the problems which are faced, or which countries are facing worldwide, which is something that of course it makes, or it is making the markets to react in a negative way. Now, for this week, some of the things that of course I'll be looking forward to, or I'll be closely monitoring, is of course is the FOMC meeting, where we'll get the interest rate figures for the month of June. We'll get to see as to what percentage is the Fed, or will the Fed increase the interest rates. But of course, analysts as seen on the screen are expecting the Fed to increase interest rate hikes by around 0.5% or 50 basis points, which is something that of course I'm looking forward to, and I'm hoping that we don't get to see the Fed increasing interest rate by over or by more than what analysts expect, and that is of course by 0.5% or 50 basis points. And one thing of course that you know is that the more we get to see inflation rising, is the more we are going to see the Fed coming out and increase, or be a bit aggressive when they increase interest rate hikes. And one of the things that of course it is really sad, or it makes me to be sad, it is the fact that most analysts believe that the inflation has not yet peaked. We are still going to see the peak, or we are still expected to see inflation rising and maybe get to a peak sometime in the second half of this year. But as it stands right now, the way we are seeing prices of food, prices of fuel, gas rising, we have not reached a peak stage. So those things are still going to continue rising. I mean, here in South Africa, you will remember that food prices are still expected to rise by a double digit in the second half of this year. And now, as I've said, the more we get to see the prices of food, gas, and oil rising, is the more we're going to see interest rates being aggressively risen by the central bank, or the Federal Reserve, which is one of the things that of course, yeah, it's going to make the stock market in the short term to really be difficult to predict as to what is it that we can see. But you already know that I think it's Goldman Sachs, and they're expecting the S&P 500 to fall to around $3,400, and it closed on Friday around $3,900, which that just should just definitely show you that we are still going to expect, or we are still to expect the S&P 500 to drag or to drop further, as many analysts, or some analysts, or big financial institutions are expecting it to get to $3,400, which is something that as an investor, it must just show you, or prepare you, of course, to not panic and probably continue dollar cost averaging, continue loading the boat as the market continues dropping. One way or the other, the markets will recover. At the end of all this chaos that we are in, or current market conditions that we are in, we are going to see the stock market recovering, and we are going to go get our good gains here again. And the good thing is that, as I've said, or as I've been telling you, inflation it is expected to peak, or get to a peak sometimes late in the second half of this year, which is something that of course will definitely calm maybe the aggression of the interest rate hikes from the Fed, which is something that of course is going to make probably the stock market to start recovering. And another thing is that in the midst of all these current economic conditions, where we are seeing inflation shooting higher or continuing to rising, the Fed also on their side, they don't really want to, or they can't just come and aggressively increase interest rates as if there is no tomorrow. But that also can have a very negative impact, or bring a huge impact on the US economy. So this interest rate event, which we are set to see, or which is set to come on Wednesday, like I said, it is one of the events which I'll be closely monitoring. But I personally believe that We might even get to see them, of course, increasing again by 0.5% or 50 basis points. The worst case scenario, it might be 75 basis point, which it's also possible, having to look or see that inflation is still very high, but I don't think we can get to see them going over 75 basis points. But I personally believe that the market right now is an opportunity for you to continue doing your dollar cost averaging, the hard work that is making us to go in the markets and put money. We are going to definitely be rewarded when the stock market recovers, which is one of the things that, of course, it must motivate you to stay long onto the stocks that you hold, to stay long onto those ETFs that you hold, because one way or the other, the stock market will recover, and there's no doubt about that. So otherwise, with all that, guys, I just thought I should just give you these quick updates on the outlooks of some of the events that I'll be closely monitoring this week, which is, of course, as I've told you, the FOMC, which the Fed will come and give us the interest rates hike news, which, like I said, most analysts are believing or are projecting that it might go up by 50 basis points. And the fact that, of course, the consumer price index, which we got late last week, came very high, there might be a possibility that we see a 75 basis point increase, which is something that, of course, I personally, like I said, it might be a worst case scenario on the markets. But otherwise, most analysts are expecting that the Fed will come and increase the interest rate, or the US interest rate, by around 50 basis points. Otherwise, with all that, guys, I make tons and tons of stock market investing videos. And if you think that this video was amazing, please don't forget to hit that like button, comment, and subscribe. And once you subscribe, don't forget to hit that notification bell, so that at least you get notified by YouTube every time I drop a new content. Otherwise, it is always important for you to do your own due diligence before you load the boat on the favorite stocks you like, on the favorite ETFs you like, so that at least you get comfortable, or you become comfortable as you are investing in the stock market. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.